So first of all, thank you for coming to watch me speak, and I'd like to thank the conference organizers as well as our colleagues at the Alberta and Canadian Embassy for allowing us to speak today and present to you on some hydrogen opportunities in Alberta. So I'm going to focus my presentation around the production side of hydrogen in Alberta, which typically revolves around blue hydrogen. And then my colleagues Brent and Brendan will be talking about the downstream applications as well as some export opportunities. So to introduce myself, my name is Chris Malayney, and I'm the Director of Business Development at Alberta's Industrial Heartland Association. Our association is a government-supported, municipally funded organization with the mandate to attract investment into Alberta, Canada. So really what we're trying to do when we're out in the world is trying to get companies to build large-scale projects within the industrial zone we represent, and we represent the largest hydrocarbon processing region within Canada. Sorry, I'm getting signaled to slow down here, so I will try my best to slow this all down. So the region we represent, it is made up of about $40 billion in assets, and there's about 45 companies operating within the region. We've existed for 24 years, and we exist to help companies from all parts of the world understand if the next capital project makes sense within our region. And it's worth noting that when we are out in the world working with companies, we're not looking for finder's fees or project development fees. We are here to work with you and companies because it benefits our municipal partners through taxation and economic growth within our region. So to provide some context on Canada and Alberta and our industrial zone, I've laid out this slide here. So we are located in the province of Alberta. It's the second most western province within Canada. We are an inland industrial zone, so we are not on tidewater. As Minister Nally mentioned, we've got projects off our west coast, including LNG Canada, but we represent an industrial cluster which sits within the province of Alberta, which is about 1,400 kilometers from the coast. We are located next to a large city, Edmonton, the city of Edmonton, which is the provincial capital. And we represent an industrial area that's excessively large. It's about 582 square kilometers. So when you look around the world and a lot of the chemical clusters in Europe and Asia, it's really tightly constrained on itself. We have tremendous room to grow, and I've got some pictures that kind of demonstrate just what this industrial area looks like. Once again, this isn't a concept. We've had assets in our region since the 1950s, about $45 billion worth of assets, and about 40 world-scale companies operating in the area. So as you can see on this slide, these are some of the companies which operate within our area. Notably, the names you likely recognize, Shell Chemicals. They operate one of their 5 eco-clusters within our region. Dow Chemicals has a large ethane cracking and derivatives complex. Nutrien, the world's largest nutrient provider, operates 2 facilities with our region, including a blue ammonia production facility. And then we've got a bunch of international industrial gas providers such as Air Liquide, Air Products, Linde, and a number of Canadian midstream infrastructure companies who are looking at ways to expand their business within Canada and outside of Canada. And these would include companies like Pembina, Inter Pipeline, Keyera, and Plains Midstream. So this slide here, there's a lot of information on here, but it gives you a sense of the products being produced within our region. So first, I've cut this up into about 4 buckets, the first bucket being midstream and utilities. So a lot of our region is based on the processing of natural gas and oil today. So we've got significant natural gas processing and natural gas liquids infrastructure, making methane, ethane, propane, butane, and condensate available for further processing within our region. We've got significant salt cavern storage within our region. So this is somewhat unique in North America. It's basically within Alberta and Texas, you have the ability to store hydrocarbons and being tested out to store hydrogen underground in salt caverns. And this saves a significant capital savings because you don't have to build those above ground vessels. We've got integrated natural gas and utility infrastructure systems. And we've got 2 operating world scale CCUS systems, which I'll touch on later. On the downstream gas and natural gas liquids, we've got significant ethane, methane, and propane processing within our region. So as I mentioned, Dow has got a large ethane cracking complex and will hopefully be home to the world's first carbon neutral cracking complex. We've got Nutrien producing ammonia, ammonium sulfate, and urea. And this is the site where it's carbon capture enabled, and they are producing hydrogen and ammonia, which they don't refer to as blue, but it'd be low carbon, carbon capture enabled production. And then we've also got some other more niche chemicals like isooctane, styrene monomers, and a few others. We are also, though, in Canada, the largest hydrogen production and consumption center. And really the reason for this is we've got 4 world-scale refineries existing in our area. They are upgraders and refiners which process crude oil into refined fuels, and they are a large sink for hydrogen demand. And because of that demand, we've got Air Products operating a number of hydrogen production assets in our region. And they've made announcements to incorporate blue hydrogen into that mix. And then beyond that, we've got a few other interesting assets, including nickel and cobalt refining and further downstream metals materials. So as I mentioned, here to talk about the hydrogen opportunities we see it. And as I mentioned before, we view this through the blue hydrogen lens. We think there's opportunities around green hydrogen, incorporating renewables, but really one of the big advantages for us in Alberta is our access to low-cost natural gas. So really, and what I want you all to take away from this presentation is kind of 3 major points. We believe we are globally competitive, and what we mean by that is we are economically competitive. These are projects that stand on their feet with strong economics. We're government supported. We have social license to develop projects in our region, which is somewhat rare in the world, and we've got all 3 levels of government in Canada supporting projects in our area. And we're scaled for growth. We both have the room to grow, the physical space, but we also believe our asset mix positions us well for a sustainable future. And why I like to show this slide, you can see in the background there, this is a snapshot of the industrial area we call Alberta's industrial heartland, and this represents about 1/100th of the industrial land. And you see about 4 major facilities here, but there's tremendous room to grow on flat land that's being used for agricultural purposes right now. So before talking about the hydrogen opportunity, I need to provide some context around the natural gas situation in Western Canada. So a lot of people don't think about Canada as an energy provider, but we are the 6th largest producer of natural gas in the world. As Minister Nally mentioned, we've got tremendous reserves. We've got over 1,100 TCF of proven reserves at competitive prices. I believe that's below $4 a US per MMBTU, which means about 200 years of supply at current demand levels. So it's essentially infinite, even at low costs. And this is being developed right now. Typically, natural gas is produced as a byproduct in Western Canada because the producers are chasing the heavier fuels, condensates, and heavier liquids in that natural gas. So currently being produced in Western Canada, and I'm speaking beyond Alberta, this includes BC, you've got about 15 or 16 BCF a day being produced, with about 15 flowing through the heartland today, providing lots of access for further processing of natural gas within the region. The problem in Canada is we don't have a large population base. We're talking about 36 million people in one of the largest countries in the world, so we have more gas production than we could ever use. So the majority of our gas is exported into markets, primarily the United States. And this is leading to further exploration on how to get this natural gas through a variety of forms into Asian markets and other global markets. But because we are net long natural gas in Alberta, we are a price taker, which means we have some of the most discounted natural gas in the world. So this slide here, there's 2 lines, and the black line is Henry Hub pricing, so that's the large US indicator for natural gas pricing. And the red line is what we call AECO, which is the Alberta price for natural gas. So I pulled this data going back to 2005, and what you can see, with the exception of one short period, our gas is always at a disadvantage to Henry Hub. And that's positive for consumers, whether you're producing hydrogen or other chemicals and fuels. So it's ranged over a period of time between, it's gone negative. We do get short-term bursts where occasionally it flips, but that's very rare. And we've seen upwards of $4 discount. We expect long-term this to be in the $1 to $2 range looking forward, because we are going to continue to be net long natural gas, even with the uptake of LNG off the West Coast. I just ended up pulling this right before this presentation, and what we're seeing here is it's kind of interesting in the whole global context of natural gases right now. We're sitting around $4 a US per MMBTU in Alberta, which actually touched on the daily negative the other day. We get this rare occurrence where our prices actually go negative and producers pay consumers to take it away. And relative to Henry Hub, that was about 100% discount. And relative to some of the European ports, including the Netherlands, which were trading around $60 an MMBTU, it's significant savings. So we believe this is one of the key advantages for us going forward in the hydrogen space, is our ability to access both cheap but secure energy feedstocks for processing. So in addition to the natural gas I mentioned, we've got 2 operating CCUS systems. So walking around the conference, there's a lot of interesting projects being contemplated around the world for CCUS, whether it's utilization or sequestration. We have 2 of them operating in our region right now. What this means is if you built an asset, a hydrogen production unit tomorrow, you could plug into these systems and be sequestering CO2 tomorrow. And within the global context, that's significant what we have available. So the first project, and this has been operating since 2015, was developed by Shell. It's called Shell Quest. They're now with partners CNRL and Chevron on this project. And it sequesters 1 million tons a year of CO2, and this is just pure sequestration about 40 kilometers away from one of their refining complexes in our area. The second project, I should mention too, Shell has plans to develop another project with a couple different partners, which they're now being referred to as Atlas, which gained some global traction when they made this announcement. The second project is newer to the region. It's called the Alberta Carbon Trunk Line, and it's owned and operated by Wolf Midstream. And Wolf Midstream is a Canadian midstream company, which is relatively new in the context of some of the other companies. But this pipeline is a 240-kilometer pipeline, which, the way they define it, the world's largest CO2 pipeline. And it's operating about 10% capacity. Currently, it's capturing CO2 off of Nutrien's refining complex, or fertilizer complex in our area, as well as a refinery called NWR. So it's capturing smaller volumes of CO2 and has tremendous room to grow. So this type of asset is something that you can build and attach yourself to these assets. This was alluded to by Minister Nally in the speech before. In addition to the 2 existing CCUS systems, we are moving to a novel model within Canada and announced 6 new hub operators which will operate within Alberta's industrial heartland. And this means you will have 6 different companies to work with for your sequestration options. We believe this is a definite advantage for our region. As you're building new industrial projects with emissions, you will have the ability to go talk to 6 different players to shop around your emissions. And in Canada, we have a price on carbon. You have security in that price, so you're able to negotiate the value of your emissions with these 6 partners laid out here. They may or may not mean something to a lot of the companies in the room, but these are some of the largest energy infrastructure companies in Canada are participating in the space, including Shell, Enbridge, TransCanada, which is now called TC Energy, as well as a few others. So when we combine our natural gas prices and our ability to access CO2 sequestration infrastructure, which is operating today, we believe there's a strong advantage to having some of the lowest cost hydrogen production in the world. So I pulled 2 separate charts here from 2 different sources, and I apologize, the chart on the right is difficult to see, but I believe we'll be sharing this around after. On the left-hand side, we've got a chart from the Transition Accelerator, which is a think tank out of Canada, and they estimated hydrogen production cost, blue hydrogen production cost, using autothermal reforming at a variety of natural gas prices. So at that $3 a Canadian per GJ price, and apologies, some of these units using Canadian dollars and GJs and KGs get somewhat confusing, but hopefully it all ties together here. At that $3 price, you get about $10 US dollars per GJ of hydrogen. If you translate that to the chart on the right, which is put together by the Asia Pacific Energy Research Center, that looked at a variety of different hydrogen sources globally using green and blue technologies, that would position us as the 2nd cheapest producer of hydrogen in the world, and that's low carbon hydrogen. So difficult to see, but that red line there is highlighting the Canadian natural gas plus CCS option. The only country highlighting their support that would be cheaper than us is Russia, and right now there's difficulties in developing projects in Russia. So we believe on its own, these projects have the economic merit to go forward. But in addition to this, we've got tremendous government support from all levels of government to advance these projects. Minister Nally touched on it, but I'll elaborate a little bit further on the programs that exist. At the federal level, we've got funding programs such as the Strategic Innovation Fund, which deploys capital in various ways to best fit investors' needs for strategic projects for Canada. They've got tax credits for research, and we've got preferential tax treatment for industrial facilities called the Accelerated Capital Cost Program, which basically returns 100% depreciation for industrial assets. Newest to the federal government, and we think this is very important going forward, is they have a program called the CCUS Tax Credit Program. This is fairly new. It was announced just a few months ago, which offers tax credits for carbon capture and sequestration projects. So they will provide you 50% tax credits for carbon capture equipment and 37.5 tax credits for CO2 transportation, storage, and utilization systems. We believe this will funnel through to both the companies looking to capture off their industrial assets, as well as the transportation and sequestration options, offering a low rate to actually store that sequestration for emitters. At the provincial level, we've got significant incentives. As Minister Nally mentioned, we've got what's called the Alberta Petrochemical Incentive Program. And despite its name, it applies to hydrogen, especially low carbon hydrogen. So what that does is returns 12% of the eligible capital cost of a project to a project once they begin operations. So if you build $1 billion project, 12% of that capital is going to be returned to you in the form of a grant as soon as you start operating that asset. And we believe that program really levels the playing field within North America and the world for building these assets. They also have a number of other initiatives underway, which we are part of, such as the designated industrial zone, which will fast track and align approvals for industrial assets in our region. And then finally, at the municipal level, and this is the association I represent, its members have agreed to provide an incentive program we call the Heartland Incentive Program, which returns 1 to 2.5% of project capital cost through property tax abatement. So when you build an industrial asset in Canada, you pay property tax on machinery and equipment, and our partners within our industrial zone are deferring a portion of that tax to help advance the projects within our region. So beyond providing just financial supports for these projects and having meaningful impacts to the project economics, this signals, I think, for a lot of investors that all three levels of government in Canada are ready to get behind your project and want to see you go forward. So between the project economics and supports from governments, we've been privileged to have a lot of good announcements in our region lately. So I'll touch on a few of the hydrogen-related announcements that we've experienced. The first one being a partnership between Itochu, so the Japanese trading house, Petronas, the Malaysian state-owned company, and a Canadian infrastructure company called Interpipeline, which is owned by one of the biggest private equity firms within Canada. They've announced they are looking at 2 projects by project, which would be a world-scale blue ammonia and a world-scale blue methanol project. And the intent, and I believe my colleague Brendan in his presentation will touch on the export opportunity, is to deliver hydrogen through the form of chemical carriers. Seems to be the most viable route to get it out of Canada right now. So they're looking at ammonia to deliver into Asian markets. Similarly, Mitsubishi has announced a project with Shell to look at delivering hydrogen to Asia through the form of ammonia from one of their industrial facility within the Heartland. I will mention, though, that these projects are in study phase. They're not sanctioned. They're not a final investment decision yet. We also have Hydrogen Canada, and Brian Moon here is representing the project, so I recommend go talking to him. He is looking at something very similar to the other projects, or his company's looking at something very similar, looking at world-scale ammonia projects to feed Asian markets. And finally, I've put it in here, it's not a pure hydrogen project, but Dow has announced they're looking at the world's first carbon neutral cracker within our industrial zone. And the reason I include on this list, because it's utilizing hydrogen to an extent to help decarbonize the existing operations. So we're hopeful. These projects are all in study. They're not sanctioned, but we're hopeful these go forward and it helps us plant a flag in delivering energy to Asia and other parts of the world at the global scale. So that's everything I got for you today. We've got our booth set up in the Canada zone, so if you got any questions, want to chat about it, please come by and come have a conversation with us. Thank you for having me.